We'll just kick off the panel discussion where we're going to be looking at the emphasis is going to be on crypto and digital assets. I would invite, if you have a power pack panel, I would invite the four panelists to join me on stage. Dennis Lee, he's a Vice President, Investments, Open Space Ventures. Sean from Witters Worldwide, he's an equity partner with the law firm. Kavi, please join us for the panel. And Bosco, he's the legal director, Hong Kong Money Service Operators Association. I would just maybe ask each of you to take 30 seconds. Maybe Kavi, you can skip, but the other three of them, just take 30 seconds to introduce yourselves to audience and your respective firms. You can start, Dennis.
Great. Hi, everyone. My name is Dennis. I'm from Open Space Ventures. We manage about $800 million AUM, investing in tech startups across Southeast Asia. We've been in the market for about 10 years by now. On the side, we also run a small crypto fund where we invest in other GPs and invest in private projects globally. So I've been with the firm for about 5 years by now, running a few things at the firm, but also co-leading the Ocular Fund, the crypto fund.
Sean?
Hi everyone, I'm Sean Leong. I'm from global law firm Witters Worldwide. We have offices in the USA, across Europe and Asia. We are a full service firm, but my own specialism is in managing complex cross-border disputes. So before the collapse of FTX, I've worked in the collapses of Three Arrows Capital, Terraform Luna. I am currently one of the leading counsel for the Credit Suisse AT1 bond crisis, representing about 200 Singapore investors arising from the crisis. So a lot of the work that we deal with is in disputes prevention. So thanks for having me.
Thank you, thank you. Bosco?
Hi, I'm Bosco. I'm legal director of the Hong Kong Money Service Operating Association, and we work closely with the industries to act as a bridge between the HKCE and all the members, all the MSOs in Hong Kong.
Before we get into the first round of big picture questions, just a quick for introduction, heard Kavi speak on trust, and this is open to all of you in terms of, how do you see it with relation to your clients, with LPs, with investments? Have you, any of you used it? Just a general question to all of you, and then we'll get into the other topics.
I don't think we actually have used it, and there are different reasons for that. Normally, we only call capital to make investment directly. So when we decide to make investments, we call capital from our LPs, and that money flows through our bank account and flows straight to the investee companies. We don't hold that cash for long, so we keep it in the bank account only. Same for crypto funds, yeah.
Sean, you also look at crypto assets for the firm. Have you sort of looked at trust in relation to crypto?
Yeah, thanks, Joji. So, I mean, in terms of key developments in the law, there's a recent development in Singapore law that digital assets, whether you're talking about cryptocurrencies or NFTs, can indeed be recognized as a form of property. And the direct consequence is that it can be an asset that is held under trust. I personally have not seen the use of blockchain technology to manage a trust, but I think increasingly it is not a surprising thing to see high net worth individuals or even family offices who are open to having a diversified portfolio, to have a small percentage of their investment in the digital asset space. Although I must say the official standpoint of Singapore is still that crypto is not a good storage of value, and while we are all for innovation, crypto is still currently perceived as to be too speculative. But the horizon is there for a lot of potential for sure.
Got it. Both Kavi and Bosco, if you can just take our audience through the difference between Singapore and Hong Kong here.
Actually, since FGA, it's actually a Hong Kong trust. So basically, for now in Hong Kong, there's no, I will say that somehow there's a gray area. And trust is actually the most legit way to hold digital asset at the moment. So we kind of welcome our client, the settler, to invest in cryptocurrency or inject what they already have into their trust and utilize it or invest in any other areas.
I guess just to add on that, and this is not a Singapore, Hong Kong argument, but in terms of trust and requirement, and maybe both Singapore and Hong Kong lawyers can correct me if I'm wrong, but Hong Kong, when you have the trust in Hong Kong, I believe it's more, and I hate to use the word, but firewall or protective, and it's very difficult for one to get a see-through compared to the Singapore, where I do understand there may have been some events that have triggered a see-through.
I just want to shift gears, like, start off with, for our audience, a bunch of big picture questions to set the stage. I'll start with you, Dennis. Uh, the biggest incident in the crypto world, maybe in the last 24 months, was the FTX collapse. And there's a whole range of negative news that came with it. But if you sort of look at the last couple of months, it appears that the crypto winter is over, and you run a crypto fund in open space. What's your take?
Um, as an investor, right,
Yes.
I think we were looking at the past 12 and 18 months as an opportunity for all investors to come into the market if they truly believe in the ecosystem, etc. Because price was quite depressed and everyone was basically got scared right after all the bad news. The past few months has been quite amazing. As you know, we sort of believe that the market bottomed in last October and November in terms of sentiment. And then when the Fed pivot their tones and when there's news about Bitcoin ETF and Ether ETF, for example, there's been a massive amount of liquidity coming into the market and retails are risk on again. So we are seeing it as a beginning of a new bull market at the moment, and it might last for a while. It won't last forever because we will say that crypto has always been quite reflexive and quite cyclical. It will go up, it will go down, but it leaves it to the professional asset managers to find a way to invest in the market. Yep.
But just a related question to you. When it comes to the real world use of crypto tokenization, in the last couple of months, we are starting to see it being, used in a whole range of things, from carbon credits to companies even using it for ESOPs, treasury bills, a lot of other things. So is it finally, are we at a stage where we're seeing some level of maturation of, in terms of real world use of tokenization? What's your take?
I think the market has gone through a testing phase, right? People were testing around different assets for tokenization. And tokenization is great because it brings in accessibility and liquidity, right? Things which were too expensive, too illiquid are now being accessed by retail investors, basically unlocking values for both the buyer and sellers. It's going to be a trend that will continue, right? Whether the market will mature or not, or whether it become a future of money, there are a few conditions that we think will need to be met. And ironically, the most important thing that needs to be resolved is something that crypto is supposed to offer, which is trust, right? Trust that the platform which is offering all this tokenization will do what they are promising to the end customers. They will behave in adverse situations. They will not provide any fraud. They will do proper due diligence on the asset that they are tokenizing. We don't know if they are doing a good work yet. It's remain to be seen if they are able to build trust and track record with the retail customers. We look at it like for tokenization to become the new standard in the market, the trust need to be managed, right? There are two ways of doing it. Number one, we ask the government to come in and enforce that trust, right? If someone is doing bad thing, they go to jail, right? Or the second way of doing it is that you remove trust out of the ecosystem. You build a consensus layer with the technology to remove any individuals or group of individuals to be able to control the outcome of whatever protocols out there. It remains to be seen because everyone is trying it. Not many people have been able to build something meaningful yet. But we would actually seriously look into any projects which are trying to remove trust out of the whole system as a whole.
Got it. Thanks. Sean, you mentioned the high-profile cases that you've handled and currently are handling. How has the Singapore regulations evolved ever since we had the crypto chaos? And do you think the current regulations are adequate enough to protect investors?
I think how it has evolved really effectively is there's been reinforced clarity on two key domains between number one, consumer and retail protection, and number two, ensuring that businesses can continue to thrive, right? So it's all about having a balance between innovation, promoting innovation, and risk management or mitigation exposure, right? And Dennis talked about, what we have seen from the collapse of FTX, but it's important to understand that the iPhones that we are all using is actually even older than the first Bitcoin as invented. Bitcoin is only, I mean, cryptocurrency is only 15 years old, right? Within 15 years, we have had 3 collapses. Each collapse involving quantum worse than the other, right? And I was just sharing before the event that this recovery, some call it bull run, is the fastest ever, right? The first collapse you have seen when the founder of Mt. Gox died with the password. Second collapse being the ICO craze, and obviously the third collapse recently with FTX. Each time, if you look at a 15-year horizon, crypto has risen to the highest spot price ever historically, right? But yet, if you compare to the US dollar, it has more than 200 years of history. So is it too early to see crypto as a alternative storage of value? I think so. But is it premature to write off crypto? I think so as well. So I think the key point is to learn from the lessons of the past in terms of accountability, setting risk management parameters, right? So when you're talking about regulation, a lot of it, unfortunately, is to do with hindsight in terms of the lessons we have learned from the past. And I say this for all jurisdictions. We don't know when the next bear market would come, but when it comes, it could hit the hardest ever, right? So it's all about preventing that. And I think jurisdictions, we work very closely with Hong Kong. We need to work together as well, very closely to make sure that that horizon doesn't come true.
Just a quick add-on question. Recently, we've also seen the approvals for ETFs for crypto. Does that show increasing confidence by some of the regulatory bodies in this asset class?
I think ETFs, the impact of ETFs for the crypto space cannot be underestimated, right? It came before the current bull run. To me, that is a recognition, even in the deepest of the crypto winter months ago, that there is still ability to extract greater value from the crypto ecosystem, right? The fact that ETFs are on the front line now in terms of the pricing shows that that preparation was made months ago. But I think more important than that is that ETFs crypto kind of normalizes crypto in the sense that it allows us to understand crypto as, for example, on par with equities, bonds, financial instruments, which can be structured, leveraged, securitized, right? So there are more potential, right? Roadmap for greater opportunities, but also roadmap for greater risk to be managed.
Kavi, let me come to you. We heard about the recovery in crypto. So do you think we'll see more high net worth, ultra high net worth individuals investing in digital assets?
Okay. Digital assets, I think, will have a place to stay in this world. We have seen large companies already now accepting digital assets as payment methods. I just want to wind, let's look at the utility of these Bitcoins now and see what it can do. I mean, it's not just Bitcoins, all cryptocurrencies, and see their main benefit. The main benefit and what it was really established to do is A, storage of value and movement of funds. So today, let me take an example. I'm sitting in Hong Kong and I want to buy someone a coffee in Singapore. Can I do that in a cost-effective manner? The answer is no. Using crypto, I'm able to do it in a cost-effective manner and a quick manner. So that's utility. We keep utility aside and we look at investments. We look at the high net worth and then we look at a portion of their portfolio. We believe that there will be enough or section of this portfolio that should be diverse enough to keep their crypto in it. And we have seen that from a lot of our high net worth clients. They are very bull on crypto and have always been supporting this product.
Yeah, thanks. But Bhaskar, when you look at the digital assets ecosystem, it's highly fragmented. A lot of companies building solutions. There's no interoperability, even for, there's no standard rules in terms of issuance of tokens. So what can really be done here? Do you think regulators, governments need to step in?
Yeah, when you're talking about issuing tokens, lately, I think recently the bull run, we can see that there are a lot of, allow me to say that, some altcoin or shitcoins. So all these shit coins, they have no backgrounds. They are purely, you can only read their white papers. You can't do what's behind them. It's all pure roadmaps and it's all visions. There's nothing you can prove. And end up before some of them could be listed on the exchange. End up most of them would not be even listed, and some of them would be listed on some smaller exchange, and it could go to 10x or 100x. But most of the investors who invest at the early stage would suffer huge loss because it won't be listed and the money is gone. So what I'm thinking is that we need some kind of regulations, just like the listing rules that we are, or we're imposed on stocks. We might need an authority to govern these tokens before they are being listed or issued to private investors.
I just want to shift gears, maybe spend 5 minutes on another key aspect here, which is, real-time cross-border payments and settlement solutions. Again, Dennis, I'll start with you. Southeast Asia, when it comes to ASEAN, so many companies, fintech companies, including unicorns, they've all raised loads of money. Many of them claim that they're addressing the real-time cross-border payment settlement solutions, but actually they're all playing the arbitrage game. And in the advancements that you're seeing in the digital currency space, how do you think it'll help cross-border transactions? And can we have like an investor's perspective here?
Yeah, we have been looking at this space for quite some time. As you know, there are so many guys in this space. It's competitive as well, and all of them were trying to differentiate in one way or another. But it all boils down maybe to two key factors. One is cost, and the other is time to money, right? Whether you can receive money very fast. When we look at the traditional rail, the inefficiencies came from a few things. Number one is that there's many frictions because there are so many intermediaries in between. Each of them were doing their own processes, sometimes manual, sometimes automated. Each of them are subject to different regulations, so they have to do their own AML, KYC. The SWIFT network itself has inefficiencies. So crypto does help reduce the cost and the time to money in some of these steps only, right? There are so many steps in between now. They are able to remove some inefficiencies, but they are not able to remove all. So we recently did a company that were trying to do remittance using crypto as a back-end rail. They still need to have a local partner to do on-off ramping. They still need to do AML, KYC, still need to be compliant. There are so many steps in between. As a result of it, right, there's some incremental improvement, but we are looking for more improvement overall. The key thing here is that crypto is actually level playing field for both the incumbents and the challengers. So everyone has access to it. It's whether you want to take risks and improve your process and reduce the cost and try to be competitive. It remains to be seen if a new guys will be able to come in and being able to challenge the existing guys. But we do see that it's opportunities for everyone at this point to adopt crypto. Yeah.
Sean, just adding on to what he said, ASEAN has Project Nexus. Do you think that, when it comes to regional interoperability, that is a potential solution?
Yes, I think so. I think, as Danny said, there's a lot of opportunities to achieve cost efficiencies and economies of scale. I actually think that it is, in many ways, could be perceived as a precursor where there is really a regional infrastructure set up for, without sounding too optimistic, fiat to crypto conversion. That would be the basis where, ironically, a decentralized philosophy would be relying on a couple of coordinated centralized systems to scale, right? So I think what to me is even more interesting is the use of blockchain technologies, to facilitate settlement payments. That's also an interesting development.
Kavi, so many companies, startups, you run a firm, so all claim to be offering solutions for cross-border transaction settlements. But what do you think really needs to be done?
So look, cross-border transactions have been happening, and it's not a new industry, it's very old. Where we see it moving is moving more to the digital space, and that needs more regulation, more technology, more innovation. And when that happens, we need to then look at the concept of having the ability to utilize these crypto assets and use them. you look what central banks are doing now, and a lot of countries now are starting to develop their own digital currency. And I believe that will take a factor in moving forward with cross-border payments as well, to plug it in straight into the digital economy.
Got it. Bosco, your views on the whole cross-border payments transactions and where crypto comes in, how do you see it?
Actually, what I'm for cross-border payments, I'm thinking, just, yeah, trust might be the best way to do it at this moment. Actually, say for FJ, not when you talk about trust, you might think about personal onboarding, but actually, if we do, I mean, FJ do accept corporate onboardings, and with companies who are using cryptos, they can inject asset to FGAs and convert it into other assets and do their payments. So with the appropriate KYCs and AML policy in place, I think FJ Trust and perhaps Trust itself is a solution for cryptocurrencies and fiat cross-border payments.
Would just like to follow up on that. And Bosco is 100% right. Within the FGA trust infrastructure, we're able to get and receive cryptocurrencies and internally on-off ramp it so that we can assist with the payments. And that's provided that we've got the right level of KYC done with our clients.
Dennis, just coming back to you from a investor's perspective again, like, how do you leverage the shift towards digital platforms, to diversify your portfolio and maximize returns?
Oh, that's a very interesting question. So the fact that we are venturing into crypto is already diversifying our strategy. So traditionally, we are more in tech startups in Southeast Asia. When we first formed Ocular, our crypto strategy is mainly to do a few things. Number one is create an uncorrelated asset class compared to what we have been investing in, and it has been performing pretty well. Number two, at some point in time, we do see that our core strategies would venture. There will be a conversion of strategies between tech startup in general and crypto startup as well. So this is basically the crypto fund can be a feeder into the core fund for us to venture into the space when the company is getting more mature. Yeah, for investor in particular, right, if they want to get access to crypto and think about it as an asset class, they need to think, right, number one, do they want to have exposure to that asset in the first place? Number two, if they want to, right, what is their edge in investing, right? Do they have access to good deals? Can they close deals, win allocation in good projects, for example? If not, then maybe they should just look at beta, the market, investing in Bitcoin ETF or Bitcoin in particular, or ETH, etc., or investing in GPs who know what they're doing. Yeah.
Yeah. Let me come to you, Sean, from a legal perspective. Like in terms of cross-border settlements, one of the experiments that being done here is Patia, which, if I'm not mistaken, is a jointly between DBS, JP Morgan. How is that a scalable solution to some of the stuff that we've been discussing here?
I think from a legal perspective, obviously, it's about reconciling the different legal frameworks because some may come from a different, like a common law legal tradition. Some may come from a civil law legal tradition. But that's not the real issue in my mind. The real issue in my mind is that the law is always playing catch up to the developments in the market. Obviously, using blockchain for settlement payments, I think is a refreshing move. And the initial thought is that why would you be using blockchain for settlement payments? Because Visa, for example, can process 1,700 transactions per second. Bitcoin can process perhaps only about 12 to 15 transactions per second. So from an architectural standpoint, blockchain is a very sluggish form of technology. But if you are looking at the operational intent of financial institutions, you realize that the fact that the great bandwidth of blockchain that allows for the potential of scalability actually allows financial institutions to optimize their liquidity, right? So there is tremendous opportunity to use distributed ledger technologies or even digital assets, for example, to hedge settlement risk or to hedge to reduce the settlement costs, right? So that's where I think there's a lot of opportunity there. I think the legalities would be framed around, I would say, actually digital security. You see, because given the decentralized nature of the blockchain, a lot of pressure is placed on the software integration from each domain. So, for example, you talk about some of the projects which Thailand, India, and Singapore are involved in. You would each need to have almost perfect coordination in terms of system integration to make sure that the digital security environment is there, right? And I think that's not a challenge that cannot be overcome, but I think that's a critical point to take note of.
Got it. Yeah, thanks. Kavi, just wanted to ask you about wallets. Most of us, like in Asia, it's very common. Everybody, almost most of the countries, the population uses wallets. Do you see wallets being expanded to include digital assets? And as and when that happens, what's it for future business owners? How would it impact them?
Well, you look, in terms of digital wallets, they've been around. You look at the Alipay, the WeChat Pay, I'm sure you have your own systems here. We all see that going, but do we see the digital assets? Yes, there are actually digital asset wallets coming out and already in play. And a lot of them have been used currently in today's environment.
Uh, Bosco, just coming to you in terms of the difference between, fintech and traditional banking. When it comes to future money flows, can digital trust sort of help solve the problems that you see traditional banking institutions face?
Actually, for now, we can see that the traditional bank gets stuck with the so-called well-established KYC or AML requirements or procedures. So what I think digital trust can kick in here is that it acts as a bridge between the so-called crypto world and the traditional banking. So the trustee can bear the responsibility to do all KYCs and all KYT to make sure that the coins or the funds that is injected into a trust is clean. And then all the bank frictions could be solved by the trustee. So the traditional bank does not have to custodize or convert or hold any cryptocurrencies. It's a trustee who act on behalf of the clients to hold the assets.
Just moving on, I would like all of you to maybe take a round of questions on our theme today, which is the future of money. So, again, Dennis, let me start with you. For our audience here, can you sort of explain the difference between how, let's say, a Web3 fund operates and a traditional fund operates? And what are the challenges that you face when investing from a Web3 fund?
Right. So I'll go through that question in three areas: investment, portfolio management, and fund operations. From the investment point of view, most crypto funds operate globally. So we often have a global mandate. We have to source deals globally. It's present a challenge that if we are just sitting here, it's very hard to get deals in the US, get deals in Europe, for example. Sourcing is very challenging. That then poses a question of where your network is, and if you are able to build a global network, if you are able to build a globally distributed teams to help you cover different markets. From the portfolio management perspective, most of the good projects there require good value adds from investors, which often relate to technical support, tokenomics designs, network and connections, right? So not all generalist funds have that. More often than not, we have to look into crypto native funds who have such value add activities. And the last one on fund operation, it used to be a challenge, but it's getting solved right now, is that finding the right banks to serve you, finding the right fund admins to serve you, finding the right auditor as well. It used to be really hard, especially after SVB collapsed. A lot of banks don't want to touch the segment at all. You're getting solved today. More fintech companies are coming in, bridging a gap, and we are often have to go to second-tier guys for auditing, for example, because the big four might not provide the services, kind of thing. But it's getting solved. Yeah.
Got it, yeah. Sean, Hong Kong recently sort of issued, just last month, maybe a week ago, crypto licenses. I think the VATP license, there were about 24 applicants. Singapore did it some time ago, they got about 70. But apart from just comparing the numbers, how are both jurisdictions different?
Well, I actually think both jurisdictions are very competitive and fairly similar from a regulatory framework perspective, and definitely from the legal perspective in terms of what businesses are allowed to do. It's a tough question for me because I have a Singapore bias as a Singaporean, but I'm Cantonese. My grandma is from Hong Kong, so I have a soft spot for Hong Kong. I would say um, that competition would always bring the best out of each other. There are obviously a lot of strengths that Hong Kong as a jurisdiction has that Singapore does not. But one thing that Singapore has is that we have direct access to a vibrant and lively ASEAN, markets, right, from Indonesia, Vietnam, Thailand. So there's tremendous opportunity directly in our front yard and our backyard, right? And we are in the epicenter of this environment. I would say in terms of Hong Kong, um, from a risk management perspective, you would have to have a nuanced understanding on the extent, if any at all, the policy motivations from mainland China would creep into the Hong Kong jurisdiction directly or otherwise, right? That's always a overarching point that cannot be ignored. Whereas for Singapore, obviously we dictate our own regime and we set the path forward in terms of from a centralized perspective, right? I would say, putting the law aside, as long as we have the crown jewel of Token 2049 at Formula One week, we would still have a slight edge for Singapore.
Yeah. Interesting. Kavi, you're a service provider. In terms of when you look at the future of money, where do you think traditional banks have an edge, and where do you see firms like you having an edge?
Okay, look, traditional banks, they will always be an important player. And we're not disintermediating them. We are actually being and almost engaging them again. But by doing it, by us taking that role of doing the KYC that they're not capable of doing, or that they don't understand their clients, or they're overburdening them their regulations and their own KYC. And that's partly because, and again, this is the talk which I had with my own banker today. He said, look, we are one bank, we're operating in multiple jurisdictions. We have to take into account that we have to follow regulations between all our 100 jurisdictions that we operate in, which means we have to have an all-encompassing, solid, strict compliance measure, which may not be applicable to one jurisdiction as if it's just Hong Kong or if it's just Singapore. And due to this overarching environment that they have to create, we now, I guess, engage them and take on their burden of having their client by being almost the intermediary between the traditional bank and the Web3 world, and not only that, to the whole banking system, where these clients have not been able to bank. So we provide that platform to the clients.
Thanks, Kavi. Bosco, again, related to Hong Kong, the jurisdiction is the city is taking a big bet on crypto. What will it take for it to become the Asia's maybe like say premier digital assets hub? Do you think it'll be a very bumpy ride?
I think what Hong Kong currently needs is a clearer legal framework, because unlike Singapore, at this moment Hong Kong only got a VASP license, which only covers the exchange that it's gonna incorporate in Hong Kong. So for now, actually, we are undergoing consultation on licensing OTC DAS in Hong Kong, and yeah.
We well past our time, but I would just like all our panelists maybe to take one round of questions on family offices before we come to sort of concluding thoughts. Dennis, again, I'll start with you. In the last 24 months, Singapore has attracted over 1,000 family offices who've set up offices here. How do you see family offices making a difference? Being an LP in funds or doing direct investments and providing employment, working with the VCs, and how do you see it?
I would divide them into two sets, right? For those who have been here for some time and those who are new. Those who have been here for some time, they have been investing in the GPs here. We know them well. Increasingly, we are seeing that more family offices are participating in the private capital market. They are doing more direct deals. the investing in GP is mostly to, number one, learning how the system works, and number two, to get access to deals. And it's a good thing because now companies in Southeast Asia have access to alternative capital, and we welcome this kind of capital, right? It's also pushed the VCs to find a way to differentiate themselves, add more value to startups so that they deserve the chance to invest. For the new family offices, we do have chat with a few, but we actually have not seen a lot of activities in the market space. Maybe they do deals that we don't know. Yeah, but actually we have not seen much. It remains to be seen if they are going to ramp up their activities over here.
But even going beyond, before these family offices, so many of them came to Singapore. Sean, like the VCC structure that Singapore set up, I think it was in 2020, to provide a lot of benefits, be it for hedge funds, private equity firms, VC firms, to set up shop here. How much of a game changer has that been?
I think that that has been a huge success, and one of the key factors that led to the momentum that we see in the family office space because of the flexibility that the VCC structure provides, right? Where you can have an umbrella framework where you get to divide your funds into separate sub funds. So from a family office perspective, you can imagine that the patriarch, the matriarch can divide the funds, to give one to the third favorite son, second favorite son, and the only daughter, right? So there is a lot of flexibility to customize the investment motivations for each fund, but yet allow adequate control with the family. So I think the VCC is an integral part to support the growth of the family office space.
And Kavi, like, what's your relation, firms like you, what is your relationship with family offices? Because they would ideally be your best potential clients, right? Because if they can use trust for wealth transfers to investments.
You're correct. I mean, our firm has been engaged with a lot of family offices. There are a lot of our clients. They use it for multiple reasons, some for privacy, some for estate planning. And then we also use it for family offices that have made a lot of their wealth from the Web3 world. And the Web3 world have been having an issue and trying to come into the banking world, trying to get off ramp and try to enter. But that has been very difficult. And we see that as being an immense problem right now. So we become a natural solution for them. And that's why I call the newly rich, the guys who have made money from the Web3 world, they come banking with us. And I would now say the old rich are also now approaching us because they also want to diversify their portfolio and enter the Web3 world. So it's a dual effect here.
Yeah. Bosco, Kavi mentioned the newly rich and the old rich for HNIs in terms of the difference in regulation between the two cities. How do you see it, and how would an investor choose?
And actually, like in Hong Kong, SFCs imposed are much, I would say, less stringent requirements on single family office because there are three factors to decide whether it's a single family office, whether it carries business in Hong Kong, whether they generate any profits, and if these elements are not matched, usually they are not required to obtain any license in Hong Kong. When we compare to Singapore, correct me if I'm wrong, Sean, even single family office is required to be licensed. So if if a client prefers to have a more, I would say, more relaxed regulate environment, Hong Kong might be a better choice.
Maybe take one final round of questions to conclude, all four of you. Let me start with you, Dennis, in terms of not really, how do you see, for example, the AI wave, right, impacting the whole VC space? And the other thing is, like, do you think NFTs will actually make a comeback in, it's been ridiculed a lot, but do you see it making a comeback in 2024 and beyond?
So just to clarify, AI means investment or as a tools?
Both in terms of, like,
Oh, okay.
how much will it disrupt? You're part of a VC firm. How much do you think it'll disrupt the VC space, or will it disrupt?
Okay, very, very interesting question. So we are using AI more these days, Copilot in particular, which help with our productivity in doing DD, market research and document summarization, basically, right? Do we see that AI will replace us some days? No, actually, I don't think so, or don't think it's so soon. The reason is because we make a lot of judgments based on information asymmetry, which is things that which are not available on the internet for AI models to be trained on. The feedback loop is actually quite long. It's very hard to tell if we are making a good decision or not until a few years later. So it's hard to train AI around that, right? So I think well, we'll keep our job for quite a while. Will NFT come back? Well, I understand this question in two ways. Number one, whether trading volume and value will come back. To be honest, I really don't know. I can't really tell. And historically, I have been humbled by the market many times, so I would not say that. But whether the adoption and use cases are growing, yes, definitely. I was actually sitting, no, sorry, chatting with Pudgy Penguin CEOs this morning, and they were selling 1 million toys last year, right? The Pudgy Penguin toys. And coming with the toys is actually a QR code. If you scan a QR code, you automatically have 2 or 3 NFT with you, and you don't even know that is those are NFTs, right? So adoption is growing and it's more accessible to consumers. So I think that it's a very positive trend.
Yeah. Sean, from a lawyer's perspective, when you look at Asia, do you think Asia will sort of lead in terms of crypto regulation and policies? For example, if you look at Hong Kong or Singapore or even Dubai, Japan, all of these countries are coming up with or taking steps to have regulatory and other policy decisions placed compared to say the disarray that we are seeing in the US.
I think the answer is yes. Asia would actually be a leader in the digital assets space because I think the jurisdictions that you mentioned, Dubai, Hong Kong, Singapore, they all have a common denominator, right? Which is the willingness to keep an open mind to innovation. So I think definitely yes, and a lot of potential definitely for collaboration and to work together. And I think this um, jurisdictions or these cities or Web3 centers, if I could put it that way, are surrounded by a lot of emerging jurisdictions, emerging countries, whether is it socio-political or from an economy standpoint. Dennis mentioned AI, right? I personally feel like AI needs blockchain because AI needs data. There's a lot of data in blockchain. Blockchain also needs AI because blockchain is so slow, right? You need AI to boost your computing power. And if you are surrounded by a lot of emerging economies, you have a substantial volume of data points, right, to build both your blockchain infrastructure and your AI integration upon. So I think the opportunity is definitely there.
Kavi, again, concluding thoughts from you. What are the new trends, if any, that you are seeing, be it in the Web3 digital asset space and digital asset space? And how does a firm like you sort of, like what are the steps that you're taking to sort of ride these trends?
Well, you asked me 3 months ago, my answer would have been completely different. But we see today a lot of movement within the Web3 world, especially a lot of people coming back into crypto. And them coming back into crypto means they need the ability to come on off ramp. They need the ability to hold the assets and the custodian solutions. And they need to have a trusted partner to do that. For instance, we have custodians that hold our crypto coins that are insured, and we protect it that way. We also have abilities to hold clients' fiat money, and that's held with what? Financial institutions, which are also guaranteed by deposit protection schemes by various governments. And this is how we operate within this environment where it is regulated, but it allows the people now to access the Web3 within their own ecosystem of the trust.
Got it. And Bosco, my final question to you in terms of like, again, back to what Kavi said, and how do you see, for example, Hong Kong and its strategy to sort of be a premier Web3 center in Asia? Is that possible?
I think it's possible. Actually, I'd like to share like FTX. I'm not sure whether you guys made any laws in FTX, but post FTX crashes, actually more clients are engaging in trust service because they feel like they cannot trust the exchanges anymore, and more inquiries came in. And now in the bull run, actually, and somehow people are claiming monies back from from the FTX crisis. And again, there are more people making inquiries on setting up their own trust. They no longer believe in the exchange, or they no longer want to store the digital asset with their cold wallets. So I think in the future, perhaps trust is a solution for the Web3 players, and they can. I think trust can allow them to utilize their crypto assets, and they can use it in a more flexible way and connect them with the traditional financial world. Just like I said before, like something that the traditional bank might not be willing to intake, perhaps trust is their solution to bridge them with the traditional world.
Thank you, thank you. I think rather than doing a round of Q&A from the audience, we can sort of all of you can chat with them over drinks. I think it's ask your if you have any specific queries or questions to each of the panelists. You can maybe talk to them during networking drinks. My special thanks to all four of you, for the insightful, engaging sessions that we had, and I hope that all of you found it useful. I hope you found the content valuable, and like inviting all of you to sort of stay on, catch drinks, continue the conversations, and continue the networking. Thank you so much. Thank you for being here this evening. Thank you.
Thanks, Georgie. Thanks, man.